Here we go.
Good morning, everyone. Dan Bates, President and CEO, Greater Hamilton Chamber of Commerce, and we're glad you could join us today for Coffee and Conversation. So we are going to hear from Scott Thomas in just a little bit, and you know what the topic is about. So, we can't wait to see what he has to say about, how you should look for somebody to help with your investments and your finances and all that type of thing. So I'll let Scott cover all that. He's going to introduce himself when he gets started. Anyway, so we are on Zoom, and if you have questions of the presenter, I'm sure he won't mind if you interrupt him, raise your hand, and ask those questions. We're also on Facebook Live. So if you're on Facebook Live, type your question into Laura, and she will report them to the speaker to get your question answered. So that's the protocol. You know who I am. We're going to turn it over to Gino to find out who all of you are.
Thank you, Dan. Good morning, everybody. As Dan said, thank you so much for joining. I'm going to go around left to right on my screen, and I will hold our presenters to the end. So the first one I have is Mr. Billy Bruns. Welcome.
Hey, I'm Billy Bruns. I'm the Executive Director for Family Promise of Butler County.
Great, great. Mr. Ben Cornish, good morning.
Hello, and good morning to everyone. I'm Ben Cornish, Vice President, Financial Wellness with First Financial Bank.
Thank you so much, Ben. All right, Dan, I'm going to try not to mess up your last name. Dan Swarmstead.
You got it. Dan Swarmstead here, account executive, Hub Haran. Happy to be here. Happy New Year, everybody.
Thank you, thank you. Good morning, Jennifer.
Good morning, Gino. I'm Jennifer with Modern Psychiatry and Wellness. We're local to Butler County, and we provide therapy and a variety of counseling services, groups and individuals, to youth as well as adults. Have a good day, Gino.
You too. Thank you so much for joining. Zach Bohannon, good morning.
Morning, everyone, and good morning, Gino. Zach Bohannon. I'm the Butler County Field Representative for U.S. Congressman Warren Davidson.
Great. All right, I'm going to get to my last two people that are our presenters. Curtis Clark, welcome.
Good morning, everyone. I apologize, a little bit under the weather, but I didn't want to miss the event. But Curtis Clark from the Pension Retirement Group.
Outstanding. And last but definitely not least, I'm going to have you, Scott, go ahead and introduce yourself, and then you can go ahead and you can start the presentation.
Sounds great. So yeah, thank you all. I really appreciate this opportunity. So I'm Scott Thomas. I'm the Chief Investment Officer at TCP Asset Management. We're an independent investment advisor up here in Columbus, Ohio. Curtis and I partnered together on some things, some unique business opportunities and so forth. So again, I appreciate you giving me the opportunity to speak today. I am in a highly regulated industry, so I'm going to make it a little easy for when we do the recording and post it out there. I'm just going to go ahead and read the disclaimer that my compliance wants me to have on this. So this is just for educational purposes only. And so I am a registered representative. I offer securities through United Planners Financial Services, which is a member of FINRA and the SIPC. Advisory services that I offer are through TCP Asset Management, LLC. And TCP Asset Management, United Planners, and the Pension Retirement Group are not affiliated companies. And like I said, Curtis and I do some business opportunities. We'll talk about that at another time. This is not for that. This is really just kind of introducing what a financial advisor does, some of the benefits of having a financial advisor, and kind of how you choose one that is right for you. And that, like Dan said, if you have any questions, I mean, this is just an open forum. Just feel free to interject, interrupt me, raise your hand, whatever you feel comfortable doing. So I'm going to go ahead and share my screen and make sure I share the right one here. Let's see who did this one. Okay, is everyone able to see the screen?
Yes.
Yes.
Okay, great. So again, this is the benefits of a financial advisor and how you can choose one that's right for you. Okay, let's see if I can get this to change like it's supposed to. So first of all, what does a financial advisor do? So a financial advisor, there's a lot of misunderstandings in some cases of what a financial advisor does or what a good financial advisor does. A good financial advisor is not someone out there trying to sell you something. A good financial advisor is just someone out there listening to you, trying to understand what you need, what your goals are, what your objectives are, trying to figure out. A financial advisor should be there to help you, not being there to help themselves. So let's start off. Financial advisors can come in two flavors, really three. They can help individuals, they can help businesses, or they can do a combination of both. Here at TCP, we do a kind of a combination of both. So with an individual, what are some of the things that a financial advisor does? So one of the key components of many financial advisors in today's environment is that of financial planning. So this is where a financial advisor is going to sit down with you. And if you have a significant other, if you have kids or whatever, they're going to look at your whole family picture, help you create a customized, comprehensive plan that's tailored to your goals and objectives. And the other thing that financial advisor should do is realize that this is just not a one-time document that is done, you pay for it, you move on. This should be something that is living, breathing, just kind of changes over time. Where you meet with this advisor, you should meet with your advisor at least 2 to 3 times a year at a minimum. And if you're doing a financial plan, the advisor should be there anytime you have questions. The advisor should be there to answer those questions for you. And then be there to update that financial plan, because as we know, markets change, life changes, life throws us curveballs. All of a sudden, we have to change our plan, adjust our goals. Another thing that a financial advisor does for individuals is investment management. Now, investment management is not just charging you a fee and putting you in an S&P 500 fund and moving on. There should be a little bit more in this investment management. This should be selecting an appropriate strategy that meets your risk tolerance, meets your goals, your objectives, whether it's short-term, medium-term, long-term. So it should be a really comprehensive investment management strategy, not just picking 1 or 2 funds or commission. You have to watch out also for commission funds. There's different types of investments, so the advisor should be able to explain those to you, and so you fully understand everything about them. Another key component that a financial advisor does is retirement planning. So this is kind of looking at your timeline. When do you expect to retire? Trying to estimate your future expenses, trying to create a strategy to meet those goals. And again, this is something that is not just a one-time set it and forget it. This is something that is ongoing as the market changes, as we have a 2020 event or a 2022 market where it's just not very fun to live through. The advisor should be there working with you to try to adjust those plans accordingly. Another component that an advisor should look at doing is while an advisor generally doesn't do tax advice, doesn't prepare your taxes, they should be able to help you create tax efficient strategies and work with your tax professional, your CPA, your tax preparer, what have you, making sure that what you're doing, they're working in conjunction with that tax advisor to make sure everything kind of works together and one thing doesn't impact the other. Another component is insurance guidance. Now, this isn't just sticking you in a life insurance policy that's high cost, high commission. This is something that's suitable for you. And that could be a number of different life insurance strategies. Also some advisors do some health insurance and property, but I would say your advisor, sometimes some advisors don't do the insurance, but they work with people who are experienced in that. So an advisor should at least be looking at the comprehensive view of your insurance and working with either doing it themselves or working with a professional who understands all of those and working together to help make sure your risks are covered. And another final component, now this is not an end-all be-all list. This is just some of the high level, the key components of what a financial advisor does for individuals. The final one is estate planning. And again, this is structuring an estate plan, working with your attorney who has your will, your trust if needed, and making sure that, again, what we're doing along the way is in line with those goals of that estate plan. And like I said, advisors also work with businesses. So some of the things we as advisors do with businesses is working on employee benefits. So this could be advising on different types of benefit plans, looking at your retirement plan, your 401k, your 403b, your pension plan, kind of setting that up for the company, and also working on various types of insurance. This next one is something that I see businesses, every business owner, especially when you get to the smaller business, they know that this is important, but they're so busy, they never get around to looking at it until almost it's too late. It's never too late, but they kind of continue to put it off and put it off and put it off. Just like anything, the longer ahead of time you plan, the better it is. So this is business succession planning. So this is helping business owners plan for a smooth transition of the sale of their business, whether that business is going to go to one of their children, another family member, or they're just completely getting out, selling the business somewhere else. This is working with the business owner to make sure not only that that business gets sold, but another key factor that we do is working on the tax component. Because if you have a business that you've created, all of a sudden you've grown that business and you don't have a whole lot of like remaining, it's referred to as cost basis. So what you've put into the business in terms of cost, but now you have a huge value in that business. You have a potential of a big tax liability. So this is where a good advisor can work with you to try to make sure that we can minimize that tax liability. Now, you can never avoid taxes, but you can try to do strategies to minimize them. Another component of a good financial advisor for a business is, again, working with risk management, identifying and managing the financial risks that affect that business. These can be from insurance. This could be a number of things. It can all tie in together. So working on that risk management strategy with that business owner. Another component is cash flow management. This is assisting with budgeting, managing the cash flow to support the operations. This could be finding the right strategy to manage that cash flow to try to, because now with interest rates where interest rates have moved, the business owner may be able to actually get a little bit of a return for having that short-term cash flow sitting on their balance sheet. Working with other strategies to try to help maximize cash flow for that business owner and that business. And a final component is investment management strategy. So this is providing insights to investment opportunities with the business. This could be anything from buying another business, working on having some long-term investment strategies, whatever the business may be. So this is just kind of working closely, again, just listening to that business owner and helping them with their goals and objectives of managing that business and trying to find ways to help maximize the value of that business for that business owner. So we've talked about some of the things that a financial advisor does. Now, there's a lot of other components, but those are some of the key aspects of what a good financial advisor does. I mean, you're paying these people for something, you want to get good value out of it. So you want to make sure that you're not just paying for something that somebody's selling you something and they're gone. You pick up the phone and call them and they're never there. That's not a financial advisor. That's a salesperson. So what are some of the things that you should look for in a good financial advisor? So one of the things is credentials. So there's a lot of credentials out there in the investment space, and a lot of them even I have to Google to figure out what they mean. If you have to Google the credential, 9 times out of 10, it's probably not a credential even worth bothering having, in my opinion. So when you're looking at a financial advisor, 2 of the bigger credentials that carry the most weight, in my opinion, are the CFP, which is the Certified Financial Planner, and the CFA. That's the Chartered Financial Analyst. Now there's some overlap in these, but they are a little different. The CFP is more around exactly what it says, financial planning. So that planning aspect, that fiduciary duty of being a good financial planner. The CFA, which I happen to have, that's the Chartered Financial Analyst. That's a more comprehensive investment management, portfolio management designation. Like I say, there is some overlap, but there are some slight differences there. The next one is experience. How many years has the advisor been doing, not just been an advisor, but experience in the areas where you actually need help with? Are they experienced? Do they have similar type of clients as you? Do they have similar type of clients with a similar goal, similar profile as you? Things like that, just so things to look for in an advisor. This next one, a lot of people get confused with fiduciary responsibility. So there is fiduciary duty, and then there's another regulation that came out a few years ago called regulation best interest. While they sound a little the same, the regulation best interest is not quite as legally binding as fiduciary duty. Fiduciary duty is something that I had. So I spent, to give you a little bit of my background, I spent about 25 years at JP Morgan in a different business. I was on their asset management team, and we had a lot of plans that were governed under what's called the ERISA rules. So that's the Employee Retirement Income Security Act. Goes back to the early 1970s. And basically it means if you're managing this, you have to put yourself in the shoes of the client. And anything you do has to follow that prudent man. You're doing something for that client that you would do for yourself. So that's a key thing, I think, especially in today's environment, to look for. Look for an advisor who has fiduciary duty and is not just supposed to do things on your best interest, but they're legally obligated to do so. Now, with a lot of fiduciary advisors, what you'll see is this next one is transparent fees. When we have a client at TCP and they see their statement, they see line item, every single fee they're being charged, nothing is hidden. So they can see a fee for how much they're paying the advisor, how much they're paying for all of the billing and management of the back office that we have to do for being a financial advisor. They see every fee. There's nothing there's no hidden fees, no surprise fees. Everything is told to the client up front. Another one that I think is important is communication skills. It's not just being able to tell you, hey, we're going to do this and move on, but being able to take, financial advice comes, the financial markets are very, very, very complex. And you have to have somebody that's going to be able to take a complex topic and make it so that everybody can understand. It's not just like my father-in-law was a mechanic, my dad was a mechanic. They could talk all day long about cars, but I wasn't the expert in managing the cars. So they would have to explain to me, well, okay, what are you doing? Why is this broken? Why do you need this? That's the same thing with a good advisor, being able to explain something. Not everybody understands the financial markets, and that's okay. But an advisor should be able to at least explain to you what they're doing and why they're doing it, and making sure you understand everything that's happening. And if you don't, it's incumbent upon the advisor to make sure you do before implementing any strategy. I won't implement any strategy for a client without first making sure that they understand what I'm doing and why I'm doing it. And another thing to look for in a financial advisor is ask for references. Find references from other clients. See how satisfied they are with this advisor. Some advisors have Google reviews, some don't. There's been a lot of regulation around that. So if there's not a lot of Google reviews, don't get as concerned about that. But if you ask for a reference and the advisor is not willing to give you one, that should be a red flag. An advisor should be willing to say, okay, here's a couple clients. Feel free to contact them about my services, about how I work for them. So we talked about what you should look for. Well, what's some of the questions we should ask? Because, okay, great, I should look for all of this stuff, but how do I ask the right questions of the advisor? What are some good questions to ask when I'm meeting with an advisor? And the other thing is, anytime you're meeting with an advisor, my recommendation to clients is, if they're looking for a new advisor, go talk to 2 or 3 advisors. I'm fine. I'm not going to be a fit for every client, just like another advisor is not going to be a fit for every client. You have to find an advisor that's right for you and your situation, that you feel comfortable with and that you can trust. That could be me, that could be Curtis, that could be somebody else, and that's okay. So here's some of the questions to ask. One of the big ones is, how are you compensated? How are you getting paid for working for me? Every advisor should be able to clearly explain, here's how I'm paid. You pay this, I get paid. You pay X, I get paid Y. and we should all be able to understand that pretty clearly. What's your investment philosophy? Do you just go and pick things just at random? Do you have an investment team? What's that investment? If you have an investment team, what's their experience with investments? How do they go about choosing the right investment strategy for my situation? And again, here's the other question. Can you provide references from current clients? Next question would be, how do you stay updated on market trends? Because we know the market's changing. New financial strategies come out. How are you staying up to date on that? Or are you even staying up to date on that? Or are you just reading what comes out on Yahoo Finance every day? What's your approach to risk management? I mean, my background was fixed income. So from a fixed income guy, we're always thinking risk. So I sometimes have a different view than others may have, just because I've always carried that risk management hat, but others are different, and that's okay. Next question is, as I mentioned earlier with the financial plan, how often do you update my financial plan? How often will we meet? Will we just meet once a year? Will we meet twice a year? If I have a question, can I come in and have a meeting? If you're doing a financial plan with an advisor, my view is the advisor should be kind of at least available to take a question from a phone call any day, and then be able to set up a meeting with you within a 2 to 3 day time frame of that phone call to say, okay, you have this client has a concern. I'm going to bring that client in for a meeting, and it could just be a 15-minute meeting. It could be a 30-minute meeting or a 60-minute meeting, depends on the situation. And then a final question to ask is, how will you tailor your advice to my specific situation and goals? It can't just be, okay, I have a client, they're 40 years old, they're retiring at 65, here's the strategy. Just like we're all different in how we dress, how we act, we're also different in how we are in our views of risk, and the views of the financial markets, and views of the markets going up and down. We want to be able to understand that client's goals, and so your advisor should be able to understand that, articulate that, and create a plan specific for you. So I know I've done a lot of talking, and hopefully I haven't put everyone to sleep. So I'm hoping there's some questions out there. I want to make this as free-flowing as possible. I don't want to go on and on. There's a lot of other questions, a lot of other things to look for in a financial advisor. So feel free, ask me any question, and it can be about what I've talked about. It could be about anything really you want to talk about this morning.
Well, we could talk about girls basketball, but we're not going to do that, Scott, right?
Well, it's kind of a pain point right now, especially since we blew our undefeated season last weekend. We lost to our rival, and so we're still top. I think we're still top 2 in the state.
Okay,
but
the question I had is, I'm a little bit familiar with financial advisors. Had one before. How do you know how much you should pay in a financial advisor?
That is a great question. If you look at it, it really comes down to how much work that advisor is going to do, and and now, for example, a lot of advisors like us, we're fee-based advisors predominantly. So you come to us, you have say you have $500,000 account. Okay, you're wanting to retire in 15 years. We'll build that plan in there, but generally in a fee, you're somewhere in that 1.5% kind of range, give or take. I mean, it depends on the situation. If there's a lot more intricate work, if you have multiple businesses, you're having real estate, you have all kinds of other assets, and it becomes more complex, there might be a little more fees charged. But again, it's really going to be depending on how much work needs to be done. And that's why I would also say, talk to 2 or 3, ask them the same question. How much are you going to charge me? Here's my situation. And then it's just like anything, you find out, okay, I want to pick, it might not be, I may not pick the cheapest advisor. I might not. I may pick the middle of the road, or I might pick the most expensive, because they're going to offer me a lot more services.
And you know, and that led me to another question, and I don't want to dominate all the questions, but I guess the ideal scenario for a financial advisor is I've got a guy that's got X amount of dollars, and how do I invest this so that I can retire when I want to retire? But I would think the majority of people you run into might say, well, I don't have a whole lot, but how do I start preparing for retirement? What do I do with the money I'm making now? And, where do I go? How
Yeah.
do I get to that $500,000 that I'm ready to invest?
Yeah, I mean, we have now. I use the 500,000. I mean, we typically look at clients that have that or more, but that doesn't mean we're going to turn away a client that has 100,000. It really depends on the client, I mean, making sure it's a fit for both sides. But in some cases, I'll talk to a client. If it's not a fit for me, I may recommend, hey, go to this person, or here's some places to start out. I mean, I have clients who have kids that have 10, 15, 20,000 that they want to invest. And because the client is already one of my clients, I'm not going to charge to give the kid advice. I'm going to go ahead and give the kid advice and say, okay, maybe you go start a Robinhood account, buy an S&P 500 ETF, just continue to put money in there while you're in, maybe you're a high school kid, maybe you're a college kid, just get started. So that's the nice thing about today's markets versus 20 years ago. 20 years ago, I mean, 20, 30 years ago, you had maybe 6 or 7 places to go to. You had Merrill Lynch, Morgan Stanley, JP Morgan. You didn't have as many choices, and you had it was tough time if you only had 10, 20, 30, $40,000 to invest to find somebody that was willing to take you as a client. What do I do? Well, now you have Robinhood, Fidelity, Schwab, all these places offering these low cost, low entry point investment strategies where you can go in and learn the market when you're younger and understand it, get in it while you're young, and understand the value of that compounding returns and how you might start at 16, 17, 18 years old, putting $100 in after your paycheck. And then you graduate college, all of a sudden you got 10, 15, $20,000 that you've built up. You got a nice little start.
And I guess my question was, and maybe it's not a financial advisor you talk to, maybe you talk to a bookkeeper or an accountant. I'm talking about people that are saying, okay, I want to start preparing. What do I do in the amount of money I'm making now? What do I do with after I pay bills or whatever it may be to start preparing to start investing? And I know that might be a really open question, but I think a lot of people need that more so than people saying, I've got X amount of dollars, help me invest this.
Yeah. So, I mean, I would recommend, if you're starting out, if you're first and foremost, get a budget together and figure out to the penny what your income, what your expenses are. Try to get that budget, figure that out. And then once you've got some left over, if you have debt, try to pay that down first. And then once you start having some money left over, just start finding some way to do a low-cost investment strategy. If you Google low-cost ETFs, S&P 500 ETFs or whatever, just find some low-cost strategy to start. And then you start with that 50, $100, whatever it is, each pay period, each month, put that in there. And then over time, and you should see with compounding returns, it should start growing. I mean, now we can't guarantee the market's always going to go up or go and whatever, right. But historically speaking, the market has over a long period of time tended to go higher.
And I guess that might have been better suited question. Let me see if Ben's still on here for Ben. But anyway.
Yeah, no, I do remember Ben talking a lot at some of the networking luncheons about how he helps people prepare that budget. And I think that's great. So yeah, that's probably would be a good person to start with if you're trying to get your budget together and get things worked out so you have some extra money to invest.
Exactly.
But great questions.
Hey, Scott, so I had a question, on your one slide, you had about what to look for in a financial advisor, and you talked about the fiduciary responsibility. Is that something that, I don't know, has a credential to it? I mean, so if I'm talking with somebody and I ask them, hey, what do you feel like your fiduciary responsibility is to me? They could tell me
Well,
anything potentially, correct? Or how does that work?
Yeah, generally you're going to have, I mean, this CFP, you're required to have, legally required to work in the client's best interest, and the chartered financial analyst. I mean, I'm required, I mean, I have a lot of ethics that I have to abide by, including making sure that I put my clients first. So I would look for those credentials first. But that doesn't mean that somebody that doesn't have those credentials is not a fiduciary. Most independent financial advisors are legal fiduciaries. So just because you don't have a CFP or a CFA, that doesn't mean you're not a fiduciary. But like I said, when you're doing a financial plan and you're doing investment management, generally, and you're an independent. So when I mean independent, you're not tied to a broker dealer that's sitting above you trying to sell their products. So I mean, I think the big, they call them wirehouse firms. They're great firms. JP Morgan, Bank of America, Morgan Stanley, but they have a parent company sitting above them. Now, a lot of those advisors that are sitting at those places have the CFP designation too. So that gives them, that gets them the fiduciary responsibility. So even though there might have this parent company that might be trying to sell the products, the CFP is still required to legally follow the fiduciary standards.
Okay, that makes sense.
Yeah. Any other questions?
They're being awfully quiet today, aren't they?
Yeah.
Usually Dan has some questions. Where's he at today? We got two Dans. Usually Dan Bates is our question asker. Anybody have any other questions for Scott? Curtis?
Well, I don't know, not necessarily a question, but I really want to thank Scott and I want to thank Curtis. You guys have gotten involved with the chamber. I appreciate it. I've got a long-standing relationship with Curtis. I've known him for years. We worked together in my previous life at the African American Chamber, and I trust him totally and just love what you guys are doing and what you guys are bringing to the table here at the chamber. When I look around, people I know like a Curtis and a Scott and a Ben, when you're talking about financial matters, I mean, and the old saying, God, I wish I knew then what I know now. Oh my God. Well, if I knew then what I know now, first of all, I wouldn't be on this call right now because I'd be somewhere on a beach, sipping Mai Tais or whatever. But it's so important. And, I'm just lucky that I've got my youngest son that is really financial literate, so to speak. And he's got stocks and he's doing all kinds of things. And he didn't learn it from me, but thank God he did learn it somewhere. So if we can put some of this to place, in our children or maybe our younger siblings or whatever it may be, it's so important. So important.
Definitely.
Yeah.
Time, it can be in your favor, even if you're starting with incremental amounts. If
Yes.
you've got 10, 20, 30 years, it makes a huge difference over time.
Absolutely.
All right.
It's never too late to start.
No, it's never too late to start. It's never too soon to start. Like I said,
Correct.
any amount, anytime, definitely start now, with whatever platform you find. Because like I said, time is your friend.
Yes.
Help you out with compound interest. So any other questions for Scott?
Maybe what we can do, because I know we got a little bit of time, is Scott maybe Laura, is it okay if Scott gives his contact information?
Yes, please do.
Okay, all right.
Yeah, I got it up there on the screen. So,
Oh, pay attention, Gino. I got it. Never mind.
yeah. So Scott, it's pretty simple. Scott at TCBS. It's a lot easier email address than at JP Morgan. So I'm here with, I think we're in about 7 states, and I think we've got like 28 people, 30 people, something like that, without including all of our advisors. So it's a lot easier with my email address than when I was at JP Morgan. I had to throw my middle initial in there, and there were 3 Scott Thomases just in my building here in Columbus. And then there was a Thomas J. Scott in Wilmington, Delaware, that did something with the bank branches. So I used to get mail from the mortgage guy, the tech guy who was in our building, and I would get phone calls from New York bank branches being adamant that I was the person that was supposed to help them. So it's a lot different. People have asked me a lot what it's like going from a company with 260,000 employees globally to a place like this. Had I started my career here, it probably would have been a little different. But starting at a place like that, I mean, JP Morgan obviously opened doors that would never get opened anywhere in most other places. And I was able to keep a lot of those relationships and bring that here. So been pretty fortunate to have done what I did there, and now to be in a place like this. It's a lot more nimble here. If I need to get something done, it's a lot simpler. I don't have to go through 6 committee meetings and 6 to 12 months of working things out to try to get an answer to get something done. It's pretty much one discussion, making sure it's compliant, and we move forward. So a lot different. I mean, pros and cons. I mean, there's reasons JP Morgan has to do the things they do. So it's a great company. I got great experience there.
All right, Dan, you have any other questions for Scott?
I really don't. I think Scott did a great job. Thank you, Scott.
You're welcome. Thank you. I appreciate the time.
Listening to your story right now, sounds like you're the only person I know left a job just because of their personal name. But
yeah. That's what I get. I mean, my wife always said you can't trust somebody with 3 first names. I'm like, well, I have 3 first names. She goes, oh, you do?
Oh my.
Well, actually, you can trust somebody with 3 first names.
Yes.
I think you seem very trustworthy, Scott. All right, so for a wrap up, thank you everyone for being on. We will be back for Coffee and Conversations on Tuesday, February 13th. This will feature W.H. Steiner, Candace Jones to discuss the Secure Act 2.0 and IRS Rule 7702. So tax-free distributions that last your entire lifetime are achievable for those who want to learn. So we invite Hamilton business owners, employees, and their families to check out the benefits and features of these different plans. So we will be back for that. Scott, again, thank you very much. Curtis, we hope you feel better soon. Thank you for being on, and we will see you all in a couple weeks.
Thank you, everyone.
Right,
Ben, if you could
thanks.
stay on for just a second.